All right, so to be cognizant of everybody's time, we're going to go ahead and start. I think there'll be some more people joining in the next few minutes. I'm Baron Mills, Executive Director of the Florida Photonics Cluster. I want to thank you all for joining us today. I'm going to turn things over to Alexei Glebov, who is the president of FPC.
Well, good afternoon, everyone. I'm very excited to welcome all of you to our webinar. It's actually a general member meeting of Florida Photonics Cluster. So today is going to be a topical workshop dedicated to international trade and export. So we have 4 outstanding speakers who will educate us on the basics of export, finance and insurance and planning. And hopefully, we will have enough questions to have answered. Besides that, I wanted to actually give one number because, we had this not this kind of similar presentation about 3 years ago on export, but we're repeating it. And there is a very serious reason for it. So according to the latest stats from SPIE, the worldwide photonics market is about $1 trillion, right? So now the US part of it is 25%. So essentially what it means that if you are not exporting, you are missing on 75% of your potential customers. And that's why export is really critical, especially for smaller companies who have limited understanding, let's say, of how the logistic of export works and where they can find any help on that. So anyway, before we proceed with the presentations, I wanted to first thank our patron sponsors, Enterprise Florida, the High Tech Corridor, Orange County Government, Optigrade, IPG Photonics Company, Imperks, ER Precision Optical, LightPass, Orlando Economic Partnership, UCF Business Incubation Program, and Sphericon. We're really super grateful to all these companies and organizations for supporting the FPC course. Next, I would also like to basically highlight several upcoming events that's going to happen in the next couple of months. So first one will take place on April 12th at the Indian River State College at Fort Pierce. It's called Optics and Photonics Symposium and Festival. It's a one-day event. So Brian Mass, the rep for Florida, will be opening the event and giving his introductory words. And then we will have some industrial players from Florida, kind of emphasizing the technologies that we have here in the state and give an overview of Florida photonics in general. So very interesting event. Baron has all the information to register. So if you guys are interested, please, it's a 2-hour drive, not really such a big deal. So join us for this event. It's going to be fun. Second, obviously, very important, it's Defense and Commercial Sensing Conference, DCS from SPIE. For now, that's the only photonics conference that we have in town. It's the largest defense photonics conference in the world. So it's really important. So we spent quite a lot of time working with SPIE to bring this conference back to Orlando. It used to be here probably 5+ years ago. So then they started moving around the country, but they brought it back for 3 years now to Orlando. Next year is going to be, I think, in Baltimore, if I remember correctly. But then there is a really good chance that they will bring it back to Orlando and make it permanent here. So it's very important for us because it's a great showcase for Floridian photonics companies. Actually, a lot of us are involved in defense photonics as well. So what we're going to have there, and it's the first week of May, here in Gaylord Palm Resort. So we will have about 25-30 Floridian photonics companies either together in the Florida Pavilion or just scattered on the floor. But anyway, it's a great event. Please attend. Attending the show is free. So you can obviously register for the conference, for technical presentations and so on, but attending the trade show is free. Also on Tuesday and Wednesday, I'm sorry. So we're organizing 2 workshops starting at 10:30 on each day. So one will be dedicated to Floridian photonics free space optical communication topic on Wednesday. And another one will be on modeling and simulation and connection to photonics industry. So these are two great events that you might want to be attending in May. So besides that, FPC in-person event will happen in May. So basically it's at the LightPath Technologies, May 25th. Please put it in your calendar because we have usually 2-3 events a year. So that's where we will see probably the largest presence of photonics companies here in Florida coming together. And LightPath obviously is a very interesting company. It was very interesting technology. So if you want to learn about this, please attend this event in May. So that's it for the introduction of events. And again, as I said, thank you so much to our sponsors for supporting the organization. So now we have an invited guest, Andrea Vesabrana from Career Source, Central Florida, who will introduce us to an amazing program. It's a summer youth program or internship program. She will tell us more about that.
Thank you so much, Alexi. Thank you. So next slide, please. So for those of you who don't know, Career Source Central Florida is basically a resource for all of you. It actually goes to the mothership of the Career Source Florida group, which I know there's some DEO reps on here today. And in a nutshell, we're here to support employer needs. In particular, my program, the Summer Youth Program, focuses on career exploration for interns and really teaching kids 15 to 19 that are enrolled in our local high schools across 5 counties. So Orange, Osceola, Sumter, Seminole, and Lake, career exposure. And so working with STEM companies like yours all, working with the photonics industry, I know career exploration within photonics is an incredibly important part of FPC and getting future generations into our talent pipeline. This is a great program to do just that. So next slide, please. We have a 3-track approach. I'm going to focus on our experience track, which is basically paid internships because we use federal and state funding to pay the kids to actually check out your workplace. So next slide. So this is the bulk of what we do. They basically come to you from about June 12th to the first week of July. It's 4 weeks of actually working with you. We give them $15 an hour for a 30-hour work week. We work with you closely on, what that internship could look like. We have a lot of documentation on how to actually work with kids that are 15 to 17, because obviously they're younger. We work with a third party to do a lot of that, risk management. They have very high insurance caps. So it really is a very low risk opportunity, again, for you to engage with our local youth and to get them to look at what your company does and what the photonics industry does in general. There's many more slides in this deck, but I know you have a very exciting lineup. So I will ask Alexi and Baron to get that to all the members because it does go into some of the specifics, about what to expect for the program and all. But again, we would be so grateful if you'd be interested in signing up your work site as somewhere that we could work with you. The last thing I'll say is I have so many kids that are really interested in STEM across 3,000 plus applications. We have about 25% of kids that are interested in STEM careers. And we even have some very exclusive programs with groups like Neo City High School, where we're funding up to 120 kids. These kids are already coming with various backgrounds with STEM knowledge, right? I mean, they're a STEM high school. So those are the caliber of kids that we would be bringing to you anyways. So thank you again, Alexi and Baron. My contact will also be in the PowerPoint, and we would love to see many of you again as host sites. So thanks for your time.
Yeah, thank you so much, Andrea. That's a great introduction to the program. I would say those who are in photonics industry, obviously, I would strongly recommend. It's something's funky with my microphone. It's a fantastic opportunity. Also, adding to this, I mean, Creole is running a summer camp for high school students this year. It's actually the first time they organized it. I would say also in conjunction with internships and students, especially school kids and STEM education. I mean, so you can also pay attention to this program. Again, Baron has all the information. So we will distribute Andrea's slides to everyone, and hopefully we'll get sufficient attention on that. So now let's go to the main part. Thanks, Andrea, again. And so we go to the main part, and Baron will be moderating the session on export. Baron, please.
All right, thank you, Alexi. So Sandro unfortunately has to leave us soon. So he's going to go first. We're a little bit out of the order of preference, but Sandro's going to go first. When he's done, he'll take any questions from participants. After that, when we go through Elena, Chris, and Kenneth, please hold the questions till the end, but certainly feel free to go ahead and as they come to you, put them in the chat and we'll make sure they're all addressed after all the presentations are done. If you haven't done so as well, feel free to introduce yourselves to other participants in the chat room while we're talking. But I'm gonna go ahead and turn it over now to Sandro, who's gonna talk about financing for export operations.
Thank you very much, Baron, and good morning, everybody. I will talk a little bit about the SBA today and the Office of International Trade as some of the programs that small businesses can use to finance their export sales. If we can go to the next slide, please. As you might know, SBA, the Small Business Administration, is a federal agency that has the mission to generate, create, and help grow and expand internationally small businesses. Within SBA, we have different divisions dealing with counseling. We do it through our partners, such as the Small Business Development Centers, and there you can receive a lot of assistance in terms of export assessment, export preparation assessment, and export planning. We also provide access to financing, not directly. We only do that when we have disasters, so we don't want to have that direct financing from SBA. Otherwise, we work with our partners, the lenders, the banks, that will use our guarantees to provide loans to small businesses. And of course, we also have federal contracting, which we have certifications that will help small businesses have access directly or indirectly to federal contracts. And some of you might also be familiar with the SBIR and STTR program. So that's also an SBA. They're also in SBA initiatives. And within the Office of International Trade, we focus on small business exporters and on the banks and lenders that provide access to financing to those small business exporters. Again, we do it just like the rest of the agency through counseling, either directly or through our partners. We also have trade finance solutions, meaning our export loan programs, which I will discuss in a few minutes, and also grants such as the STEP or a State Trade Expansion Program, which we provide funding to the states, including the state of Florida, to provide grants to small businesses so they can go on to trade mission, they can go on to international trade shows and take advantage of the opportunities that there might be in international markets. Excuse me. And also, we are the voice of small businesses when the U.S. government is negotiating trade agreements, for example. We want to make sure that the interests of small businesses are taken into account into those negotiations. Next slide, please. So before we go into the details of what is a small business or the small business loan program, so let's talk about what is a small business. Basically, SBA and many federal agencies use the North American Industrial Codes, where companies are defined by industry, and the parameters used to define a business as a small business are either the number of employees or the sales amount. So you might have manufacturers that might go up to 1,500 employees and they're still considered a small business, or distributors, 100 employees or less, or service companies. Depending on the industry, might go from 7 up to $35.5 million in sales. Next slide, please. Also, SBA considers or takes into account indirect exports. What are indirect exports? You might have a company, especially here in the state of Florida, that is selling to a domestic buyer, and that buyer is re-exporting the product. That is considered an indirect export, even though the company is not exporting directly, its clients are. And that facilitates access to the higher guarantee loans that SBA provides through the banks. Next slide, please. So these are the three programs that we'll be discussing today. Again, it's not a direct loan from SBA, but it's a guarantee that SBA provides to the bank. Whenever a company goes and applies for a loan, the bank must determine, first of all, if it is willing to provide the loan. And second of all, if it does, it has to determine if it feels comfortable assuming all the risk. If it is not, they like the business, they like the project, but they're not feeling comfortable assuming all the risks, then they will come to SBA if the applicant is a small business and request a guarantee based on the use of funds. Depending on the use of funds, we offer different levels of guarantees. So next slide. Slide, please. So if you have a small business that is moving the first steps into international, into international markets, they need to go on a trade mission to an international trade show. They need to send a sample to a client. So they need to finance all those export development activities. Then, next slide, please. We have a program called the Export Express that the bank can use to issue a line of credit up to $500,000 to a small business, and SBA will guarantee 90% for loans up to $350,000 or 75% between that amount and $500,000. Also, the Export Express can be issued as a term loan, can be used to, for example, purchase commercial real estate, equipment, debt refinancing, business acquisition, permanent working capital, and the bank can issue the loans if it is issued as a line of credit up to 7 years, or for commercial real estate up to 25 years, and 10 years for permanent working capital or debt refinancing. So the business must use the funds to expand into international markets. They can finance sales or any export activity, development activity that will help them grow their export sales. And they will also use the funds, can use the funds again to other activities such as creating, for example, or modifying their website to access international markets. And when they issue it as a line of credit, they can still use 30% of the funds for their domestic needs. Next slide, please. So we saw export development, we saw export transactions, of course, standby letters of credit whenever the small business has to issue a guarantee. For example, for an advance payment that they have received, they can use the line to reduce the cash collateral that is required to guarantee the standby letter of credit. And again, as I mentioned to you, fixed assets can also be financed with term loans. Next one, please. As the company grows, they will need, again, to expand their facilities. They might need additional real estate, additional equipment, additional permanent working capital, any expense that they need to incur to expand their capacity. And for that purpose, SBA, if we go to that.
Hello.
Yes. Okay.
Keep going, Sandra.
Please leave
Okay.
your message for 786.
Okay, if you can go on to the next slide, please. So if the small business needs to expand its capacities, then they can use the international trade loan, which means that the bank can access a guarantee to issue a loan up to $5 million with a 90% guarantee from SBA. And again, they can buy commercial real estate, equipment, refinance debt, purchase a business, access permanent working capital. All of these use of funds are allowed under the international trade loan. If we can go to the next one, please. So as the business grows, and hopefully their sales will also grow in export sales, so they will need, again, working capital, possibly through a line of credit to purchase inventory, to carry out production or provide services. Remember, these products are not just for manufacturers or distributors, but they're also for service companies. Let's think about engineering companies, architectural companies, IT companies.
No.
And so it's important to take into account all of these expenses that the exporting company will have to, the increase in expenses that are associated with increasing business. And these are some of the costs that the bank might finance under the SBA line of credit, which is the, if you go to the next slide, it is the Export Working Capital Program. This is a fully monitored line of credit, which means it can only be used to finance export sales. And it can go up to $5 million with a 90% guarantee. This, again, it can only be used to finance export transactions. It can be done through a transaction-based line of credit, financing purchase orders, or an asset-based line of credit using export inventory and foreign account receivables in the borrowing base certificate. If we go to the next one, please. So when the bank is evaluating a potential candidate or applicant for the program, they will look at the ability of the company to perform on the export transaction, and that is done through by looking at the experience, and that's why we require that a company has been in business for at least 12 months, or if they don't meet that requirement, that the principals, the owners, have the experience in the industry and the exporting. We also want to make sure that they're not just going out there selling, because a sale is not a sale until they get paid. So we want to make sure that the exporter is taking the necessary steps to make sure that it will be paid, either by getting paid with cash in advance, or using a letter of credit, documentary collection, or insure foreign account receivables. On certain occasions, we can waive the requirement for insurance, but it's always recommended. And as Elena will explain in her presentation, it will give a lot of peace of mind to the bank, but also to the exporter. Next one, please. These are the advance rates that the exporter can obtain against purchase orders, up to 90%, against foreign account receivables, and 75% against export inventory. Some of the requirements in terms of collateral, remember, banks loan based on cash flow, and the cash flow is always the first source of repayment, but the bank will take also collateral as a secondary source of repayment. These are not grants, these are loans. So you receive them, you need to pay them back, okay? So the bank will do all the due diligence, making sure that the business is viable, it's profitable, and it's going to generate enough cash to repay the loan. Venture capitalists, they don't do that. They invest the money and they hope to recoup it in 5 years by getting a high profit because they take higher risk. The bank is not a venture capitalist. The bank is lending you the money that depositors have in the bank. So they need to make sure they're not taking any unnecessary risks when they're making loans. Okay, take that into account. So they will take, the bank will take the first lien on all assets being financed, meaning that inventory and account receivables. It will take any assignment in terms of if you're getting paid with a letter of credit, the bank will become the beneficiary, first beneficiary. And if you're purchasing insurance, EXIM or any other issued insurance, it will be assigned to the bank. And any other assets that the bank will require. And please remember, personal guarantees. A bank's SBA requires that all the owners that have 20% or more ownership in the company, they need to provide personal guarantees. Or translated, you need to have some skin in the game. Otherwise, anybody can go to the bank and obtain 100% financing. They're not assuming any risk, because if it doesn't work out, the bank is the one that loses the money. I will not lose anything, right? So these are the requirements that the minimum requirement that must be met. So if we go to the next one, please. I always like to put useful contacts. Of course, you will hear from Elena Méndez, and then I also like to bring up the Florida Export Finance Corporation, which is an entity that provides financing when the company is not ready to access financing through the bank for different reasons, startup or some issues with credit, or so if you're exporting, you might have a chance to access financing through the Florida Export Finance Corporation, which is a public-private corporation that is designed to help Florida exporters, Florida companies to export. And also you always have our district office in South Florida and North Florida that is available to answer any questions regarding SBA, as I mentioned to you, contracting, or for example, access for not export financing, but regular financing. So if we go to the next one, I think that was our last one. So I'm available to answer any questions, and I hope you're successful in your new ventures. Thank you.
Yes, thank you, Sandro. Sandro's going to have to depart here as soon as his time is done. So if anybody has questions for him, you'll need to ask that now. If you do, please speak up. Please raise your hand within the Zoom functions. Anybody have a question for Sandro?
And you have my email in the presentation, so feel free to reach out.
So I have a quick one. If you are, let's say, if you're a small exporter or starting exporter, which means you have literally at this point minimal or zero international trade, right? So does those companies have any chance? I mean, I understand there is a kind of limits on the size of a company, et cetera, but how about their export history? Can people come to you with zero and still get loans and some support?
Yes, you can do it. In fact, some of the programs, such as the Export Express and the ITL, can still be used by companies that are getting ready to export. Then you need to have an export business plan. You need to show that you're really trying hard to get those to enter new markets. So maybe you're working with the SBDC, with Enterprise Florida, with the Department of Commerce, and any entity that helps small businesses to get into international markets. And even if you don't qualify as an exporter, you still have access to the regular programs that SBA offers through the banks. But again, the most important thing is making sure that your business is cash flowing. And
Mhm.
If it is not, there are some, it's a startup, there's still some programs such as the Community Advantage Loan, programs that SBA provides to community-based entities where companies that are not ready to access financing through the bank, they're not bankable yet, they can still access those programs.
Any other questions for Sandro? All right, Sandro, thank you. I know you have
Thank you all.
go off and run and take care of your bosses. I really appreciate
Thank
your time today, and I'm sure hopefully people will be reaching out to you for more information in the future.
Thank you.
All right, thanks. All right, we're gonna move on now to Elena Méndez, who is with EXIM, the Export-Import Bank of the United States.
Good morning, everybody. It's a pleasure to be here with all of you. I'm going to refer back to Sandro because our programs are similar in some cases and different in others. So as the slideshow moves forward, I will insert certain comments that are important to note the differences between the two programs. Next. So if you don't know who about EXIM Bank, EXIM Bank is the Export-Import Bank of the United States, and it's an independent agency of the U.S. government. We are the official export credit agency of the United States among over 100, I think the last count I saw was over 120 ECAs throughout the world. Heavily on the Chinese side because they do have regional ECAs, and I think there are around a dozen so far. But we do adhere to the same guidelines as other ECAs within the OECD framework. Our mission is to support U.S. exports in order to create and sustain U.S. jobs, and that U.S. jobs is very significant and is central to a lot of our programs, especially our policies. We have been established since 1934, headquartered in Washington, D.C. We have 12 regional offices nationwide, and my office is based in Miami, covers the state of Florida. And I just want to mention that even though we are the official ECA, we are considered a boutique agency in the sense that we're only around 400 staffs. So it is a rather small agency compared to, for instance, the U.S. Department of Commerce. Next slide. Okay, so we have different programs, and today I'm going to focus on the U.S. exporter programs. However, there are U.S. exporter programs, there are lender programs, and there are also foreign buyer programs that I'll mention at the end. If you need working capital, we do have pre-export financing to fulfill your orders. This is available to complete your orders, not only in products, but as in services as well. Once you're ready to ship your order, we offer export credit insurance, which protects you against the non-payment from your overseas buyers, as well as covering any sovereign risks that we'll talk about in a little bit. In addition, I mentioned foreign buyer financing. Of course, that's foreign buyer financing is basically U.S. capital goods. If you sell machinery, equipment, and other durable goods, we can look at either short or medium-term programs, which allow the foreign buyer to access direct financing with our network of lenders. Next, please. As you can see, we do across the board, we do most, if not all, industries, and definitely we want to emphasize that it's not only manufacturing and distributors that benefit, but we also have service providers in our programs. We are covering just about every sector that has export activity, and of course, any new sectors we're willing to look at and include in that list. Next. I'm going to stop here a minute because it's important to note that the pre-export financing is going to be taken care of by the working capital. But as Sandro mentioned, when it comes to export credit insurance, and especially when you have a working capital credit facility, it's important to tie the two together only because the export credit insurance will cover or will protect both the lender and the exporter against non-payment from your buyer. If you stand alone with a working capital credit facility and not take into account export credit insurance, you are, you meaning the borrower, is responsible for repayment to the lender regardless of whether you get paid or not from your overseas buyer. So it is a little riskier in the structure of just going through the working capital programs. So even in Sandro's case, he will likely suggest that the exporter consider export credit insurance when it comes time to look at the working capital programs. Next. So our working capital guarantee is somewhat similar to the SBA. We do provide a 90% guarantee of repayment to the lender when it comes to the working capital guarantee program. We also can do a transaction specific or on a revolving line of credit. We do not have any minimum or maximum amounts, but we do mention this as being a footnote. The lender will dictate if there is a minimum amount that they are willing to consider because they have minimum thresholds. They also are looking at, what the regulatory environment is as far as using their deposits for financing working capital transactions. And so the larger banks will likely have higher minimums than the regional or the local or smaller banks. We do support advances against both inventory, work in process, and foreign receivables when those are insured, up to 75% maximum on inventory, 90% on the foreign receivables side. You'll see on the next slide. So here's a typical example of with or without the EXIM bank guarantee. Most of asset-based lending will require certain advance rates and actually have ineligible categories such as work in process. As you'll see, without the EXIM bank, it's a 0% advance rate in this example, as well as open account foreign receivables that are not insured would likely not get any advance rates. And when there are advance rates, raw materials and finished goods, we are going to be considering percentages below what we could offer you with EXIM Bank. In EXIM Bank, you'll see that the borrowing base increases substantially because we are looking at 75% advance rates on those categories in general. Again, the lender will be the one to identify what the advance rate is depending on their credit policies. And again, the open account foreign receivable with our facility, as well as LC-backed accounts receivable, would increase to a 90% advance rate, whereas you don't have foreign receivable advance rates in the previous example. So you're looking at roughly a little bit more than doubling effect of your advance rate availability under this structure for this particular exporter. Next. The export credit insurance program is probably the door opener coming into our programs for most exporters, and they are primarily looking for risk protection. It protects the exporter from any non-payment from their foreign buyers. Due to both commercial and political risks, as I mentioned, it's especially important when you're looking at new foreign buyers in existing markets or even new markets altogether. We do cover certain circumstances, which we'll see a little bit ahead, but it also provides you with a marketing tool because you become more competitive by allowing yourself to offer open account terms where you've typically done cash in advance transactions with your existing foreign buyers. The open account terms will determine whether or not you're competing against your peers in that market. And it also allows you to increase the volume of exported goods to your foreign buyers because they're able to sell the products in the meantime and have the cash flow to pay you as they order more frequently or in more volume. Financial assistance is also an important component of the policies because, again, it allows you to assign the proceeds of those policies to the lender, and they can take that into account to increase the borrowing base if you have a working capital line of credit. It is important to note that, it covers you in roughly 90 to 95%, depending on the type of policy, and we'll talk about that in a minute. But generally speaking, it'll cover most events in the case of commercial default and sovereign events that we'll speak about next. So here are the risks. The risks for commercial is, of course, bankruptcy, protracted default. The customer just simply didn't want to pay or couldn't pay, insolvency. But it does not cover commercial disputes. That is something that has to be resolved between the buyer and the seller. The political risks are extremely important, and considering that, we have undergone quite a bit of a change since COVID, there may or may not be political risk depending on the country you're exporting to. We're talking about currency transferability or convertibility risks, and that's happened in the past. I've seen it as a banker. I was formerly an international banker for Latin America, and I did see that many times. Also, the cancellation of an import or export license is considered a political risk. Of course, war, revolution, insurrection, expropriation, and we're seeing that as we speak in Eastern Europe. So that's something to consider as being a viable risk that you will incur. Next. So the short-term export credit insurance policies, we have different types of policies, but basically you can either do a single buyer policy, a specific buyer that you have in mind doing either a one-shot transaction or multiple shipments throughout the period of 12 months. That has a cover of 90%, no deductible, but the insurance premium is customized to the risk of the country credit risk, and the buyer credit risk. So it's a customized premium, which we have a calculator for in our website, but that's only an indicative rate. It can go up or down depending on the buyer at the end of the day. We have the express insurance, which is only for small businesses new to export, and that allows you to put up 10 buyers in approved countries up to a maximum of 10, minimum of 2. We do all the background checkings for you, so you have no need to have a credit department at this point, and it's all no deductible, pay as you ship. So there you do not incur any expenses on premiums unless you actually do a shipment. And the multi-buyer policy, which is as you move forward and become more experienced with your express insurance, it converts into a multi-buyer for both. And this is applicable for both small, medium, and large businesses. You can have a 95% cover, no deductible, pay as you ship, but there is some buyer approval authority given to the exporter with the experience that they've incurred throughout their export sales throughout the years. And we can give you a discretionary credit limit so you can approve new buyers as well as existing buyers up to a certain limit. Next. I wanted to just mention the medium-term financing support that we offer the exporter of U.S. capital goods overseas. We can offer 2 ways of looking at this. We can do it through a medium-term export credit insurance policy that the exporter applies for and assigns to the ultimate lender. The lender can actually cash out the exporter and finance directly with the U.S. For the foreign buyer directly. As long as the content of the U.S. capital goods is at least 85%, we would require a 15% cash down payment from the buyer. And that can be sourced from anywhere outside of the credit facility. The 85% would be financed for a period of 2 to 5 years, depending on the amounts. The amounts would be up to $10 million, but it technically would be a decision made by the lender. We can look at any amount as we don't have any minimums as an agency. But we can also do it through the medium-term guarantee program, which is set for specific lenders that are authorized by EXIM Bank to use the guarantee program. So there's 2 ways of looking at this. We can look at the export credit insurance program, which is probably a more ample option. We can look at the insurance assigned through a lender, or go straight to the lender and shop the transaction so that they can cash out the exporter at that point. Next. Central to everything, we have a country limitation schedule, which is an alphabetical listing of all the countries in the world. We're open in over 180 countries right now. There are restrictions as noted in the notes of the country limitation schedule. They will specifically state, for instance, if it's a public sector buyer in a particular country that requires that the Ministry of Finance or a sovereign guarantee be added to that transaction, or in the case of a private sector company, it could require a bank, an acceptable commercial bank, as guarantor, or involved as a letter of credit, for instance. It could be the case. So it's important to look at the restrictions as it applies. When it comes to restrictions due to political or economic conditions, of course, we're looking at sanctioned countries being off cover. We're looking at political and economic conditions in extreme cases that would not allow the repayment of the loan or the credit facility in that case. So it's important to look up on real time the country limitation schedule. It's on our website. And you'll see how, if we're open, we can be open short-term, medium-term, long-term, and we can either look at public sector buyers or borrowers, or private sector. So it's important to review the country first and see if it's open, if it's open across the board, or if it's specific to a particular sector or tenor. Next. This is just a list of indicating what we can do. We can do, you know, basically, as long as there is an important component to all of this, and it's central to the mandate that I spoke about at the beginning, and that is U.S. content policy. We require all products and services to have a U.S. content of 50.1% minimum for all programs, specifically for short term. If you enter into medium term, we ask for 85%, but it can be adjusted to the 50.1% as long as that difference is presented in the form of a cash down payment. We will only support the U.S. content part on medium term. So it's important to note that. And of course, we have to look at the transaction and be sure that it follows all the qualifications under the eligibility requirements for both the exporter and the buyer. If you look in the website as well, there's also standard credit practices or credit standards, both short-term and medium-term, that talk about a little bit about the financial ratios that we look at, and how long, you know, we expect the both the exporter or the buyer to have regarding financial statements. I also should mention that in general terms, we look at 1 year as an agency, as well as SBA mentioned. However, the lender will likely have requested 3 years of operations so that they can consider it for, and they meet the regulatory requirements and credit policy of the bank. So it's really a matter of identifying or matching the bank to the exporter or to the buyer. And we do that in-house as well. Next. I wanted to talk a little bit about EXIM Bank Partners because we can't do it all alone. And it's important to know that we have EXIM partners throughout the U.S. And to start, the export credit insurance brokers are authorized by EXIM Bank to assist all U.S. exporters, especially for the export credit insurance programs. We will refer you to one of our brokers at no cost to you, and they will assist you going through the process of the application. And once your application is approved and the policy is issued, they also maintain the policy up to date. They assist you in reporting and training, all sorts of good things. We pay them the commission so that the exporter is not required to do so. The Regional Export Promotion Program members, we are lucky to have two very strong members here in Florida, one being Chris at the CFITO in Orlando, and we also have FEFC, the Florida Export Finance Corporation here in Miami, who's also both a rep and a lender. They work very diligently with our prospective policyholders, as well as working capital borrowers. So feel free to reach out to them. It's an extension of EXIM Bank in these cases. And of course, we have EXIM Bank approved lenders at all different levels. And we definitely have, for working capital, we have a list of lenders nationwide, actually. But they cover many states, including Florida. So if you want to check out the listing, it's also on the website. But feel free to contact me and I'll discuss with you. The idea is to send it to your bank. If you have a banking relationship already established with a lender, perhaps they're already working with EXIM Bank, and that would be a perfect fit. If not, we'll look for a bank that matches your needs. Next. And again, I want to talk a little bit about the relationship that we have at the U.S. federal government level as far as the agencies involved. I consider that the U.S. Commercial Service, SBA, and even the USDA are tied into all our activities as far as we are considered sister agencies. I consider them anyway, sister agencies with EXIM Bank, and we depend on each other to be able to assist the U.S. exporter. If a U.S. exporter comes to me and I realize that they're in the wrong agency, I definitely will refer them to one of our sister agencies so that they can further their inquiry. So whenever you talk to one of us, you're talking to all of us. It's important to note that so that you don't feel that you need to figure it out before you talk to one of us. Please feel free to reach out to any one of us, and we will be sure to get the others involved in the conversation at that point. Next. Here's my contact details. Feel free to contact me anytime. I'll be happy to do a follow-up one-on-one meeting with you if that's what you wish. Email me if you have any other questions. I'll happily answer them right now. Thank you. Baron, you're muted.
Thank you for pointing that out. So I think Elena, Elena's going to stay on. She'll hang out until the end. We have time for all questions and answers. As was mentioned, we did this a little bit out of the preferred order because of Sandro's time commitment and needing to take off early. So really, before you get into worrying about financing and insurance, you're first figuring out if you're actually ready to start exporting. And so that's what Chris Leggett from the Central Florida International Trade Office is going to talk about now.
Thank you, Baron, and thank you for inviting me today. We appreciate all that you're doing at the FPC to promote different opportunities for growth, and definitely exporting is one of the key tools for growth for any small business, including those in the photonics sector. Next slide, please. I'm going to start off just providing an overview. As Baron has suggested, key question is going to be, why do you want to export? So we'll talk about that. We'll take a look at what other Central Florida businesses are exporting. This is not going to be breaking new ground, though it will be for your business. I want to bust a few myths about exporting, and then finish off talking a little bit about how to help determine whether your business is ready to export. Next slide, please. So I am the, you might have to push a couple times to get everything. I obviously didn't change. Oh, there we go. I am program manager of the Central Florida International Trade Office. We're a program of the National Entrepreneur Center, and we were established by funds from Orange County government, as well as JP Morgan Chase, in order to help businesses that are both looking to import or export. And I'll mention, even though we're focusing on exporting today, that is one of the things that makes us unique in the ecosystem, is that we can help importers as well, because when we were established, there was a recognition that importing is not just about exporting jobs, it's about importing opportunities. It might be that imported product that's going to, or component that's going to make your end product competitive. So we're able to help with that, but I'll focus on exporting today. As I mentioned, we're part of the National Entrepreneur Center. We're here at Fashion Square Mall, and next slide, please. I'm available to do one-on-one counseling with the business to help you understand if trade is right for your business, and to become export ready. That was actually one of the reasons we were established as well, is that you'll have heard export ready as a term fairly frequently during these presentations, and recognize that most of the service providers are set up to help businesses that are already export ready. And so that's one of the reasons we exist, is to help you become export ready, so that you can be aware of the opportunities of the services available to help you, and then become ready to take advantage of them. We do education and outreach, so making presentations like this one this morning. We'll host a variety of events. I don't have one coming up right at the moment, but we just had one last week on how to manage your supply chain. We help, as I said, connect you to the opportunities that are available. So if a foreign business delegation is coming to the region, we'll help facilitate their visit, and then connect you to the resources that can help you export successfully. Next slide, please. So I'd like to start off talking about why you would want to be even thinking about exporting. So if you want to grow your business and you look at the United States as your market, then you need to think globally as well. Any small business owner or any business owner is going to need to find buyers. And I've got a few key statistics here for you, but 95% of world consumers are outside the United States. Obviously, you need to find money as well. Well, 75% of consumer spending is outside the United States as well. And many people are willing to pay a premium for made in the USA. So this is really too large of a market to ignore. Big part of your business is going to be managing risk. Well, you don't really want to be dependent on a single buyer. Similarly, it's not good to be dependent on a single market. The more markets you can get into, the less likely that a downturn in one market is going to have a major impact on your overall business. There's also this exporting also offers the opportunity to sell more for longer. What might be obsolete here in the United States may still be considered an innovative product in other parts of the world. There may be a big market for it. So the initial investment that you've made can be stretched out. Similarly, you might want to be looking to extend the business cycle. So if you've got a seasonal product or service, by exporting into the Southern Hemisphere, you're going to be able to use the other 6 months of the year or the other season that you're able to supply and effectively double your sales year. And then finally, it's really important for competitiveness to be looking to the export market. And it's in two ways. One is any of your competitors, whether it be in the United States or around the world, they're looking to export. They're going to be going into those markets and growing their market share. The other thing that helps with competitiveness that might not be quite as obvious is how you will learn to do business differently, and you might be able to find a way to tap new markets here in the United States to sell better because of some of the experiences you have abroad. That certainly ties into one of the things that I like to talk about with the business is you need to think differently when you export, and that new thinking is going to help you when you get back home. Next slide, please. So in terms of what we're actually doing already, we discussed briefly at the beginning that there was a slide in exports through COVID, but we're starting to see them to return to pre-COVID levels. And I like to include this information so that you realize this is not just something that is being done in large metropolitan areas, but Central Florida. So when I talk about Central Florida, I'm talking about the 4-county metropolitan statistical area of Orlando, Kissimmee, Sanford. We're exporting quite a bit as well. I mean, back in 2018, we were exporting 5.1 billion. We're nearly back there again in 2021. I don't have the final 2022 data, but all trends indicate that we'll see the growth in exports to continue. And along the same vein, this is something that all businesses are able to participate in. In the state of Florida, we have over 58,000 businesses that are exporting. Next slide, please. And just providing a little bit more information on what we are exporting. Aerospace is the big sector for us in Central Florida. Industrial machinery, electronics, optics and med tech, and automotive. In terms of optics and photonics, you heard Sandro talk earlier about the harmonized standard codes. They're divided into chapters and then into headings and subheadings. And so chapter 37 is pretty much photography equipment. And then other products that would be in that sector are in chapter 90 and the subheadings 01 through 17. And that value is approximately 73 million coming out of Central Florida. In terms of where we're exporting, no surprise, we really export to our neighbors. So the Americas is our biggest market with about 60% of our exports going here. And one of the things I find interesting and that some of you may find surprising is obviously Canada and Mexico are two of our biggest export markets. However, together they're 513 million. But you put all the little markets and so the islands, the countries in the Caribbean, 631 million. And that just goes to show that a lot of those little markets can add up pretty quickly and become even more important than North America as a market. So we really need to take advantage of our Florida location and look to our neighbors to the south, to the in the Caribbean as well, and not just larger countries in South America. Europe is another major market for us with about 20% of exports. Asia has about 16%, and the remainder goes to Africa and then Australia. Next slide, please. I wanted to take the opportunity as well to bust a few myths. Number one myth, I think that people hear or think is that they're too small to go global. However, nearly 42% of all US exporters have fewer than 19 employees. So it's really businesses of any size, not just large multinational companies that are exporting. It's the small mom and pop operation, medium-sized businesses, large businesses are all able to, and service providers as well. I also want to make sure that people don't think that if just because you might happen to provide a service that exporting is not for you. Exporting is not just for product manufacturers, and there's so many resources available to help you with those as well. Obviously, we've talked a little bit about how risky it might be to sell outside the United States, but we've also heard from Elena about some of the great products that they have to ensure that you actually get paid at the end of the day. Maybe you might be thinking your product or service won't find a market outside the US, but Made in the USA is really a great brand to have around the world. You might be thinking, okay, I've got a great domestic market. I don't really need the hassle of exporting, but that couldn't be further from the truth. I mean, I think we've learned through COVID how important it is not to rely on just the US market. And it's also a reality that foreign competitors are looking to export and export now. And that's actually one thing I would want to emphasize as well is, you know, you really need to start thinking about it in advance when times are good. You develop those relationships, find new markets. Don't wait until you're having to scramble to find sales because there's a downturn in the US market. Get out there early, get out there often. So that brings me to the number one myth, which is that exporting is going to be too complicated. That's what we're here for today. CFITO, the Department of Commerce, the Florida Small Business Development Center. We're going to hear more about this from Ken, so I shouldn't steal too much of his thunder, but there is a myriad of resources available to help you. You don't have to do this alone. Next slide, please. So in terms of deciding whether you're actually ready to export, obviously, first of all, you have to have a product or a service to sell. We've heard a little bit about how you need to be export ready in order to take advantage of the services. And so that's where having produced it for or provided that service for you know, a certain amount of time is going to be helpful. But you know, we're here to help you get export ready as well. Part of that is going to be identifying what are your goals for exporting and developing a plan to achieve them. You can't go into this just thinking, you know, I'm just going to go and try to sell. I mean, you may already be unintentional exporters insofar as you may be looking to sell in the US market. You've got a great website, got a product or service available there. Somebody who's surfing around online or is in the sector looking for the product reaches out to you and wants to buy your product. And so that's great. But in terms of if you're intentionally looking to export, you really need to have plans. I mean, it's just like starting up your business. You had a business plan. You want to have a plan for growing your business or exporting. If you own the business, there's no issue. But if, let's say, you're on the sales team, you want to make sure that there is management commitment to doing this. This is not an activity without any risk, without any financial cost. And so you don't want to be going very far down the road only to find out that the company president thinks, no, I don't want to export. This is not a good idea. I mean, you want to be able to push back a little and have some reasons in order to explain to them why they might be or how they could be persuaded to change their mind. However, ultimately, you want to make sure that you've got them on side before going very far and trying to develop those new markets. One of the issues you'll have to look at is whether you have sufficient production capacity. And that would not necessarily be just for a few small sales, but if you're going to be looking to grow your international sales, you don't want to have to be worried about whether you can actually fulfill anything that you've committed to selling. Just as it would be here at home, there are a few things that are going to serve a company worse than advertising a product, getting people excited about it, and then not being able to supply that demand, particularly over the medium to longer term. You need to be taking a look at how you're going to actually manufacture, and do you have the production capacity? And we've heard about some of the loans that are available from EXIM and SBA in order to help you grow your capacity. You have to be willing to modify your product packaging, potentially to your product itself, in order to meet foreign requirements or preferences. Just because you are able to sell it in a particular way in the United States. I mean, in terms of probably for the photonics, you're not really going to be changing the product itself. It might be labeling that you need to change. But if you're say in the food sector, there might some countries will prefer a flavor profile that's different in the US, and so you might have to make a few changes there. Next slide, please. We need to look at financing. Obviously, we've talked about export financing and the need for production capacity, but you're going to need to have a budget to sell a product. You're going to need to go to trade shows rather, to do some international traveling. You can do some business over the internet. However, there's nothing quite like meeting in person with people, and you can find a lot of your customers at a trade show. You might need to extend credit to customers as well, and that you've heard about from Elena. You need to have an open mind and be willing to learn. You can't assume that what works for you here at home is going to work abroad. You really have to sell to your customer, meet their demands, and just because the United States has a great product and we have great services, the way we sell them can be different, and that also involves how you work with your business partner. It's not, in many countries, it's not like it is here in the United States, where you want to get down to brass tacks pretty quickly and start negotiating. In many countries, they want to develop that personal relationship before they start talking about business. So things like that you need to know before you go into it. And if you just want to do exactly what you like in the as you have in the United States, that's not going to be successful. And then ultimately, patience is key. Just as success probably didn't come to your business overnight, you can't expect to be an overnight success either abroad. You want to have a long-term plan, but then steps on how to get there, and have realistic expectations as to how long that's going to take you. That brings us to our final slide. I'd like to thank everybody for having joined us today. Sorry, next slide, Baron. My contact information is there. Baron will share these slides with you afterwards, I think, and I look forward to any questions you may have at the end.
Thank you, Chris. All right, we're going to move on to Ken now.
Great, thank you. Yeah, so before I begin, it's not uncommon for me to get asked questions about starting a company. That's not anything that I do, but oftentimes people ask how to start an import-export company. And I think that the line I've added below the red line kind of summarizes things, and that is to say that for most companies, export isn't a business unto itself. It's just a revenue stream. People can make this overly complicated. Give yourself credit for what you already know. So let's advance to slide 1. All right, so who am I? What do I do? I'm director of the Orlando U.S. Export Assistance Center. What does that really mean? I work for the U.S. Department of Commerce. There are 11 bureaus within the Commerce Department. So more specifically, I work for the International Trade Administration. There are 3 business units within ITA. And so very literally, I work for the U.S. and Foreign Commercial Service. It's more commonly referred to as the Commercial Service. We are the commercial section of the U.S. Embassy. We have our own people in more than 80 countries. We have field offices in 106 U.S. cities, of which the Orlando U.S. Export Assistance Center is one. Really, what we do is only 3 things. We help U.S. exporters to distribute U.S. exports in foreign markets. We help U.S. exporters to defend their commercial interests abroad, and we help people and companies, generally speaking, to make greenfield investments into the United States. Next slide, please. All right, so this is an outline of the presentation. And as we go through, you'll find a little ship that goes from competitive advantage to channels of distribution to business partners and considerations. So we're effectively going from you as the US seller to your foreign buyer or shipping the goods, if you want to think of it that way. Next slide, please. So our first topic, if you notice there's a cute little ship there, is going to be about product selection and market selection. So if you can go to the next slide. I'm using this handy dandy method that was pioneered by Michael Porter in 1985. The bigger picture is, the theory of competitive advantage, but I'm using the VRIO analysis. And that is to say that I am looking at attributes of your company to find things that are valuable to your foreign buyer, that are rare, that are things that are difficult for your competitors to imitate, and things that your organization can leverage. If you can tick all four of those boxes, then you don't just have a competitive advantage, but it's sustainable in the long run. So if I apply this thinking to product selection, imagine for a moment that we're trying to sell ice cubes to Eskimos. Eskimos actually live in homes, they drive cars, they live in proximity to convenience stores and grocery stores and so forth, and they do buy ice cubes. So why would they buy from you? Well, maybe you offer superior customer service or better post-sales support. These are bases of competitive advantage. Maybe the source for the water you're using for ice cubes is uniquely available to you and offers certain health benefits based upon its mineral composition and so forth. That can be a basis of sustainable competitive advantage if it's valued by your foreign buyer, if it's rare, if it's difficult to imitate, and it's something your organization can leverage. So the question then becomes, is this water source valued by Eskimos? I mean, Eskimos are in the United States, certainly is that really an export, but they're also in Canada and in the Russian Far East. So presumably this could be an export, right? Well, if they don't value these health benefits from your special water source, what about and I don't know if I'm pronouncing this right, but Chukchi or Koryaks or Evans, for example, of Russia? What about the Sami or Finns or Karelians of Finland, Sweden, and Norway? The point is that you understand first what your competitive advantage may actually be. You select products to leverage that advantage, and you also select markets that appreciate what it is that you're selling. Next slide, please. So we were talking now about export basics, right? And we talked a little bit about competitive advantage in terms of product and market selection. Let's assume for a moment we've chosen Finland and Sweden or something. What are the channels of distribution that we're going to use to distribute our items? If you can go to the next slide. The most important consideration when you're deciding channels of distribution is the extent to which your company is willing and able to devote resources. There are other factors such as the size of your firm and its tolerance for risk and all that kind of stuff, which plays into whether you do indirect exporting, which tends to be less complicated and less risky, but potentially less profitable, or whether you do direct importing, which gives you more control, higher profits, a closer relationship with the foreign buyer and the overseas market, and the opportunity to learn how you can enhance your competitiveness, but it is more complicated, requires more resources, a greater tolerance for risk, and so forth. So, in my slides, if you notice, I'm not reading everything that's on the slide to you. You can certainly read it, but I do want to go over the bullets on the left because I don't know if these words mean things to you. Whereas agents, distributors, representatives, retailers, and direct sales to end user, I'm going to assume you know what that means. So a confirming house is effectively a buying agent for a foreign diplomatic representation or a foreign company in the United States. So you'd be selling effectively like interstate commerce to an entity in the United States that is then exporting the item. An export management company is a consulting practice that acts as your export department, and they get paid a commission. So you are still the U.S. principal party in interest in the export transaction. They are managing it for you. An export trading company takes title to the goods and re-exports them. So now you're selling domestically and they are exporting them. An export agent, merchant, or remarketer is somebody who contracts to you to manufacture their branded item, and you then package and label it to their brand, and they purchase it from you and export it, or you ship it to a foreign destination. So you can be the U.S. principal party in interest, or they can be there. And piggyback marketing is where somebody is either procuring your item and packaging it with their item and shipping it overseas, or there's some sort of a business relationship with another entity. And if you'll notice at the bottom of my slides, I do have hyperlinks to additional assistance figuring this stuff out. I forgot to point that out to you earlier on in my presentation. So, and that's true of each of these slides. Next slide, please. So we figured out the basis of our competitive advantage. We figured out which products we want to ship into what markets. We've decided between direct and indirect selling. So let's talk about identifying business partners. Next slide, please. So before I discuss this, there's a little bit of text under the title business partner that I want to highlight. No business activity is without risk. Right, that you export through an intermediary, even an intermediary that takes title to the goods, does not absolve you of your responsibility to perform due diligence. This is your responsibility to yourself, and it also doesn't absolve you of your responsibility to comply with U.S. and foreign law. With regard to U.S. law, we're talking about U.S. export controls. We'll touch on those in a moment or two. When it comes to partner identification, there are some things your business partner is going to want to know about you. Your company history, its resources, personnel, product line, previous export experience, and experience in their market. There are other things that they might want to know about you, but be prepared to discuss these things. Potential business partners can come from a variety of sources. They could be trade shows or trade missions, or they could be services you procure from others, or research that you perform on your own. Now, the last bullet on the left side, these are some databases that we use in the commercial service. They are fee-based subscription databases. But if you look at some of the resources at the bottom of the page, they may have subscriptions. They may be able to leverage some of these resources. A library is a good source. To talk about the previous bullets, a Gold Key service is a fee-based service that my agency offers, where we will identify, screen, and qualify potential business partners for you, set meetings for you, facilitate those meetings, and debrief you on appropriate follow-up afterward. We have a virtual version of that. That's the International Partner Search with virtual introduction. The state of Florida, that would be Enterprise Florida, has a virtual business matchmaker service, and the World Trade Centers Association has a database of World Trade Center members worldwide. You would need to be a member of a World Trade Center to access it, but you can use that to interface with potential partners. In terms of partner qualification, your foreign partner is going to want to know, or you're going to want to know about your foreign business partner. You're going to want to know the company history, background, and qualification of the principals, their assessment of the market potential of your product, how they plan to introduce your product into the sales territory, trade and bank references, and how your firm's requirements can be met. There are some red flags that are hyperlinked in the second paragraph in the column on the right. I think you should take a look at that. We have a fee-based service where we will support your due diligence by doing research on a foreign firm. There are some hyperlinks to fee-based databases you could use for this purpose. Search engines are never a bad idea. Those are the top 6 search engines by market share worldwide. Interview the references they provide and network to others that own them, that know them rather, and go see these potential business partners. That is absolutely imperative. Next slide, please. So now that we've identified and screened and qualified a potential business partner, what else do we need to know? Next slide, please. There is a follow-on webinar that the Photonics Cluster is co-hosting with me and with other speakers that will take place on October 25th that will go over export controls, intellectual property, and other legal considerations. There is no way we could go over this entire slide, even if we had an hour. So let me be really brief in saying that all of this stuff is stuff you want to take account of before you start talking to your foreign business partner, so you know what you're talking about. Your foreign business partner is going to want exclusivity. The problem with giving it to them is they can squat on the territory. So you want to limit it to a reference period of time, to a product line, and to a geography. Give them realistic performance goals, and if they can meet those goals, then you're open to extending the exclusivity. Indemnity means that foreign governments oftentimes exact a price for you to shed your foreign business partner. The closer they are to a de facto employee, the higher the potential indemnity. So that's a consideration when you're talking about sales agents or distributors. Do they represent other companies, or are they representing you only? It's not a bad thing if they represent you only, just be aware of the potential risk. Intellectual property, I have people who say I don't have IP. That's wrong, you do. Even a price list or a customer list is a potential trade secret. What happens to these assets when you part ways? This is stuff you need to talk with your attorney about when structuring that contract with your foreign business partner. Foreign Corrupt Practices Act is a U.S. law that makes it illegal for you to offer or pay a bribe for the purpose of obtaining or retaining business, specifically to bribe a foreign government entity. Consult with legal counsel. That's the short version of that. Export compliance, that is the whole question. Do I need an export license? But it's also a potential requirement to log your consignment with Customs and Border Protection using a database. It's called the Automated Commercial Environment. There are a bunch of bullets there. Call me. Logistics. That is the question of how I get my stuff from here to there. There are logistics partners. There are entities that broker logistics services called third-party logistics companies. This is a topic that we can discuss. Call me. In terms of sale, it can mean lots of things to lots of people, but effectively what I mean here is who's paying for customs, insurance, and freight, and who's organizing it. You can use Incoterms, you can use plain English. Make sure if you use Incoterms, you know what these three-letter acronyms mean, because they have force of law in the US and internationally. You could be obligating yourself to do something you didn't intend. Export finance and export insurance were already covered in previous presentations. People focus too narrowly on customs duties and total landed costs. Total landed cost is everything it costs to produce and deliver the product to your foreign buyer. Customs duties are a part of it. Duty preference refers to preferential duty rates as a result of a free trade agreement. I can help you to figure out whether your item qualifies. Standards and import regulations should be fairly self-explanatory. We can identify the foreign standard that applies to your item, and together with other partners at NIST or the MEP, Florida Manufacturing Extension Partnership, called Florida Makes, we can help you with standards conformity. Next slide, please. And this is how you reach me. Bing. Finished within the allotted time horizon of 15 minutes.
No, great job, Ken. Thank you very much. So that does bring us to the end of the webinar portion with all the presentations. We are pretty much close to the end time of 1 p.m., but definitely want to offer it up. Any questions for Elena, Chris, or Ken?
I have a question. Let's consider a real case scenario. So I'm a small business going out to Photonics West, which is a major conference for photonics here in the US. And I run into a customer from the whitelist international countries that offers me to buy my product for $500,000. So now I never exported before. So question number one, I come back home celebrating, I'm having in the pocket $500,000 order, but I have no idea what to do. And Chris, you mentioned that export is number one myth. It's complicated. Well, it's probably not, but it's somewhat complicated for those who never done this. So question number one would be, I'm back home. Who do I go to talk to? Is it Chris? Is it Ken? Both of you? I mean, what would be my move? And the second question kind of, related to that. So now I need 200 grand to manufacture this order, materials, some equipment, etc. Right? So I need a loan for 200 to basically support this order of $500,000. So the second question would be to Elena and Sandro. do I go to EXIM Bank or do I go to SBA, or where do I find the money to build this? So 2 questions, first to probably Chris and Ken, and the second to Elena, and Sandra is on here.
I'll answer for Sandro.
So Chris, do you want to go first or do you want me to just hop in?
Well, I was effectively going to say, if you've got the sale, then you'll probably want to go to Ken because he's got the network of contacts around the world that will be in the embassy at the country that you're wanting to sell into, as well as having the expertise in export controls and I mean, some of the stuff like the basics, like, you know, figuring out if the party that you're going to be selling to is a controlled party. I mean, that's something that either of us could work through with you and, you know, take, because of that information is available online. It's just a matter of knowing where to go get it. But otherwise, I'd refer you to Ken because he can do more for you in terms of understanding what the import requirements will be in a foreign market.
Yeah, 2 things jump out at me about this scenario. One of them was partner qualification and the other one was export controls, but there's more. So knowing that this foreign business partner is legitimate is one part of partner qualification, but also your due diligence really involves satisfying your principal stakeholders' concerns. And I can't know what those are. There's a product that we have that you know, helps with due diligence in terms of research on a foreign national firm, their you know, financials or business and banking relationships, their reputation and market, and these types of things that would be supportive of that. In terms of U.S. export controls, you know, there are 3 things I can't do because I don't work for the regulator. I can't tell you which agency's commodity jurisdiction this may be, but I can help you to figure that out. I can't tell you what the classification is, but I can help you to figure that out. And I cannot tell you that an export license is or isn't required, but I can help you to figure that out. The term whitelist countries may be misleading. The decision or whatever the drivers behind export controls are, what is it, where is it going, to whom and through whom, and what's the end user. So, you know, there are lists to check of foreign persons and entities that we can't export to without obtaining an export license. There are U.S. nationals who have had their exporting privileges suspended for criminal violations of U.S. export controls. There are regions of the world that we can't export to because they're subject to U.S. economic and trade sanctions. It's more nuanced than that. So that is a conversation that is something that seems daunting when you first hear it, but in reality, what it's about is having the infrastructure in place in your firm. But then I said there was more. You've never exported before. I would recommend working with a third-party logistics company. They can, based upon whatever you tell them, whether it's speed to market or price that controls, they can develop a set of options for you in terms of domestic freight forwarding, customs clearance, international freight forwarding, specific ports that it departs from and where it arrives from and so forth, and associated port fees and so forth. They can give you options. And when you're forewarned, you're forearmed, so that you can then enter into your negotiation with your foreign buyer ready to say, look, I'm willing and able to organize and pay for shipment to the port of Miami, but you're going to organize and pay to have it cleared through customs in Miami, brought alongside the ship, brought over the bow, and so forth. All of these are different unions. They each get paid. So, you know, it's a deceptively simple question. Call us, generally speaking, and we can help you to work through it. It's not as bad as it seems, but the first time you do it, you might get a little bit white-faced.
Thank you.
Ken. Hey, Elena, real quick, you want to try to hit on that question regarding the financing?
Sure. Just to add on Ken's comments, another additional resource that you should consider is the SBDC, because they do provide a lot of expertise to, especially the new to export company. They have provided great guidance for those companies, and then they come back to us In other words, we always, like I said, we always work in a team or in a huddle of sorts. So when one of us don't have the answer, we definitely look out and see who can actually assist. So
the
in that
SBDC
sense,
should have
you're
been on my
always
slides.
covered.
Yeah, I'm sorry, the SBDC should have been on my slides. Thanks for the catch, Elena.
All right.
We will
And,
provide the information. We got some, sorry for interruption. We got some information from Jill McLaughlin.
Correct. She's excellent.
Right.
So
We
you're in
will-
good hands with her. So the other side of the question would be, if you need it, like if you have a purchase order in hand and you want a $200,000 working capital credit facility to assist you in producing the goods, I would say $200,000 is likely going to be the best fit for SBA, and especially that the Export Express loan, which is not an asset-based lending structure. It's a very straight out, you show your purchase order and that you have a viable purchase, a buyer, that might help. Also, I would like to mention that depending on which banks the company is working with currently, it may be a good fit, it may not be. So in terms of who you're banking with at this moment, we would look at that, or SBA would look at that. And usually SBA and EXIM programs are usually the same lenders. But I would definitely think of going on the SBA side. We look at probably for $500,000 and above, it's a split between SBA or EXIM. But under 500,000, it's likelier that it's a best fit for the SBA product.
Great, thank you.
Yes.
I should also mention that you also have to consider the percentage of the US content for EXIM, whereas SBA does not require that it be 100% or 50% or whatever. It can be a product that you import and re-export. As long as it leaves a US port, it is part of, it's eligible under that program.
Great,
That actually
thanks.
raises a good point that we probably should have addressed right from the beginning. Is it really depends what your product, where your product is made, and we've been assuming that it would meet the majority US content requirements in order for the service providers to be able to provide assistance. But that would be sort of one of the initial questions: is it made in the US or is it made somewhere else?
Mhm.
Great. As Kim has mentioned in one of his slides, we could go on for hours with this stuff. There's so much that there is to cover. But I want to thank Chris, Ken, Elena, Sandro, and Andre as well before for all the information they provided today. It's been very helpful. And an extra thank you to Ken, because he's really the one that assembled this group together that helped us out today. I just want to finish up with a few wrap-up comments. And so we've got some FPC members on, we've got some who aren't. If you're not a member, it's not too early or too late to join. We'd love to have you do so. You can reach out to me for information on how to make that happen. Any member is, of course, eligible and encouraged, welcome to become a patron sponsor. We've always have a need for volunteers to work in areas like advocacy, events, marketing, international outreach, and so forth. If you're interested, please reach out to me. Some additional events that were talked about a little bit in the chat today, but were mentioned at the start. 15 to 18 May in the Cocoa Beach area, you've got the Education and Training Optics Photonics Conference. This is a international conference that's basically it's sponsored by IEEE, Optica, and SPIE. But Creole is hosting it this year, so it's going to be in our neck of the woods. Another opportunity for our company's industry to come together. 27 and 30 June is Laser World of Photonics in Munich, Laser Munich. As was mentioned in the chat, there are trade show grants available through Enterprise Florida. That might be the way for some of our members to get over there. There's currently 4 Florida photonics companies that have qualified for grants for this year. 3 of them are going to be in the US Pavilion, one's going to be outside of it. Some are small, some are big companies. So don't think you're excluded in any way. Reach out to Joe Bell and get more information. And then we've got 2 more in-person events coming together later this year. One's going to be in July, probably 27 July. It's going to be a joint event with the Manufacturing Association of Central Florida. at Bridge in Kissimmee. And then Edmond Optics just opened up their brand new facility over near Tampa and Oldsmar, and we're looking to do something there later in the fall. As was mentioned, copies of the slides today and some other information will be shared with all our members as well as those that registered. And I want to definitely appreciate all of you for joining us today. Alexi, would you like to close out with any comments?
No, I think just want to thank everybody, all speakers, for providing this invaluable information, really great. And so we hope that, there will be more and more, especially kind of young growing companies going into export and supported for Central Florida and Florida in general. Anyway, thank you everyone for participation.
Yes, thank you.
Opportunity.
So with that, I'm going to end the recording.